Hello, everybody. Welcome to another session. I know I missed last Thursday, got hung up on work, but let's analyze what happened in the market today. So today was a green day for SPY. Not much, but it was still, it ended up the day green. You can see here a lot of sideways action. The bulk of the move was probably Monday, and then today was just sideways. So that's the hourly. The daily looks like it's struggling at 396. Here to see how long it takes for 396 to break this resistance. I think it might play with this range for a little bit. So between 296 and 390. Could be a pretty easy play for the next few days. It's just if it bounces up and down from here, this little range play, $10 range. Good little swing. What am I still concerned about is it's not breaking this 396 right here. 396, 397 range. I want to see this break, I think, but the longer it stays up here, it does nothing. I think the break will be pretty powerful when it does happen. Let's take a look at what the market did today. Just a heat map overview. So overall, I think there wasn't anything that took too much of a hit, except for this one. Kind of neutral day. Even better map is Finviz. So you can see sort of neutral. We're in this range. It's minus 1% to 1%, and then neutral. Kind of neutral. Not too much happened. Microsoft went down. Tesla went up today. It's kept playing with the 600 level for a few days. My Tesla position for calls, I actually got out. I got out around 600. So playing this bounce again. So I'm thinking I could go back and test this 680. I think this range right here. It could be this. It could be a range like this, from 680, 700 to around 600. It just bounce back and forth in here. So I think it might go back up and test this 700 level. And when it does this bounce up, let's see if it breaks it. I'm not confident that it'll break it just yet, but it gives you an opportunity to play it, as a sort of shorter term trade. So as it approaches 700 or 680, 700, then you consider taking that position off. And then if you are a person who does option, you can get puts. If not, you just wait for it to come back to 600, around 600. This is in the area where I like to call the danger zone. There's no real movement. No real movement up or down. It just stays sideways. But the thing with Tesla is, I think it's better to just be a long trader in Tesla, because there's a lot of powerful moves to the upside. So you don't want to be caught. It just takes like somebody tweeting something or somebody sending out a message saying that there's something going on in Tesla, and then it'll just take off like crazy. So when you see a range like this, I'm more inclined to get it at 600 than I am to short it at 7 or at 680. Just because, it being Tesla, and I want to be long in Tesla if anything happens. I don't want to play both sides. Only you can play both sides, but I would only long in Tesla. No, that way it keeps the trading also pretty pretty simple. You don't want to do too many different things. You don't want to short and long forever. So just take a long is what I recommend. Long at the bottom, close to 600, as close to 600 as possible. You see on the weekly, it's not pushing. It's been 1, 2, 3, 4, 5 weeks, and that initial push below 600 on the weekly here, it came back. It never went that low again. So here, this is what kind of. That's why I got out of my cover call position too, because I'm looking at these candles and they're not making any new lows in 4 weeks. So one thing to keep in mind of something like this could happen. Pushes low and then it never stays above there for a good 2, 3 months. And then finally after 3 months it shoots up. So this is just 1 month right here. And as we approach April, probably want to be more on the long side. Just catch us at 600. Um, let's see. There's some questions coming in. Questions coming in about VICA. I mean, I don't know. I don't know what you see in VICA. This is a stock I wouldn't even touch. Just to be completely honest with you, there's nothing. I don't see anything with it. I mean, if you want to play for the bounce, because it was something caused it to fall, and you want to catch it for the bounce, go ahead and do that. Just set a stop below that last swing low. So the last swing low is 38. Yeah, that last swing low. So right around or under 30, 38 right here. That's where I would cut it. That's because I'm a swing trader. That would be advice for a swing trade, but I wouldn't risk it. I don't know what caused this, and it's pretty violent. I wouldn't be playing this stock at all, especially the setup. This setup right here, the monthly was not even good looking. I don't even know anything about the fundamentals of this stock. I mean, their earnings per share has been sort of inconsistent, all over the place. The dividend, not the greatest. It's super high like this, so want to be careful. Yo, put contract for it. I mean, if you have a put contract for it, you'd be good, but you got to be careful too. We don't know what's going on. So see this yellow line. This yellow line is a 200 average. You see it bounce right off of it. So to me, I don't know if it will break down, but if it does go back up, it could go. It's in between this range. So yeah, it could be in between this range, this 66 and 45, in between there. So it could be range bound for a while. I don't know too much about it. I was just looking at the pattern. So whatever you do, just have a plan. If I could give you the 1% move per day, I would be a rich guy. But me, I don't I don't even know. So I'm not a day trader, so I'll take on a few day trades every now and then. But if you want something that's easy, I would recommend just doing SPY. You don't even need to look at the other stocks. SPY is the S&P 500 ETF. So I mean, it's pretty stable. Um, like if you just look at it, you can catch a few dollars down, a few dollars up. Monday, I did actually take a day trade on SPY. I took just a small the 400 contract on SPY, and then I just got out in 396, but I got in around 393. So that was a play that gave me 100% return on that position. But for that position, it was only like 50 cents per contract for me. I only got 5 of them. So it was like 250 bucks on the line for me, and I just double it. So if I got 500 back. So if you want to trade something that, day trade something, neither it'll be a stock that you know really well, or it could be SPY. SPY, you don't have to really be too worried. Yeah. So that's SPY, Tesla. I was also looking at Apple today. You know, I've been seeing this, and this is something that I don't know if you guys find interesting. See this right here. It's been keeping above and right at 120. I don't know if you guys are interested in getting into Apple, but Apple is very consistent. So, I mean, it could be a great pickup around 120 for whoever play for the swing up. I'm thinking it could be in this range for a while too. So if you see this range, you can just play it. Might not be fast, but it's consistent. Between 120 and 125. It's a $5 range. Pretty pretty stable. One stock that I also have my eyes on is another EV stock, SR, uh, FSR, Fisker. Uh, Again, this is another one of my trades that I really like the setup of, because I like to pick up things that there's close to its 200 average, for especially if I'm a long player. So, if we can get, for example, if we were to get it here, at $11 and you rolled it up, even if you didn't get out until now, you still made some money. Sorry about that. My dogs were going crazy. I had to go calm them down. But Fisker is a EV that I'm currently playing. I actually have two contracts out for it, but I'm selling. I'm on the sell side. So sales. Oh, actually 3 contracts. So the 21 strike. Uh, so this is question. Do you have to sit behind a screen, or what's the tactic to use? A tactic of you have a 9 to 5, want to do daily swings. I mean, I work a full time job, so I just trade whenever I can. I keep my trades longer term, so swing trades, position trades, trade stack, trend trading, whatever. And that just helps me. So I have all my orders set, like the orders to buy, orders to sell. I have all that set up before the market's even open. So when the market is open, I just sit back. Let's go do my normal job. If my position makes it, it makes it. If it doesn't make it, I take a small loss, a small gain, or I win big. And most of the time, I'm neither taking a small loss or I'm winning really big. It's never in between. So that's how I keep a 9 to 5, and also I trade as well. So, but it involves a lot of homework after the market. So that's why I'm doing these sessions too, because to show you the little kind of research that I do, and just to look at it, because I'll go ahead and I'll set like a order for if I wanted to buy for the example this stock, right? If I wanted to buy this stock and I wanted to buy it, I know that at the end of the day at like 1670. So I'll say, tomorrow I'll go a little higher. I say, if tomorrow it's at 17, I'll buy it at $17. And I'll set a stop, anywhere between uh so 15 to 1450. Just depend on what can get me a little bit more shares. And based on that, I do my risk analysis, so I know how much I'm going to lose if it gets stopped out. So if gets stopped out at 15, I'm only going to lose me a small amount of my account, 2%, or even less than that, because this is a really speculative play. So I probably even go less than that, like 1% or a half a percent of my account, and then I just let it go. So as long as it keeps going up, or if it stays sideways, I stay in that position, and That's how I can keep in my positions and work a full 9 to 5, and be completely fine with it. And it only requires me to really look and tweak things once a week, twice a week. But that's how I set it up. Um, I mean, for sure, if you're a day trader, you can't be working a full 9 to 5. Or if you do, and you just limit yourself to trading from depending on what time zone you're in. Also, if you're in California, that's like 6 a.m. I don't know who works at 6 a.m., but if you work at 6 a.m., then uh, I'm sorry, but if you're in California time, the market opens at 6:30 for you, so you can get in like an hour of trading, and you'll be done. But that's if you're day trading, you just go a little slower. Um, so do you update stop loss if it moves upwards daily? For me, no, I don't do that because I'm a greedy trader and I know how I trade and what I like. So that's to my advantage. But yes, you can move it. You can update the stop loss, on the daily. At the end of every day, just update it so that if you get in like down here, for example, this stock, if you get in down here, you at the end of every day, you say you set a stop loss to right where the low of the day is, and you keep doing that as it goes up, right? It goes forward up through time, and then eventually you get stopped out here, but you got in down here. So that's so from here, if you got in around 18, you would have gotten out at 27. So that's one way you can do it. I mean, for me, I do it every week. So if say this is we look at the weekly charts, it's even better. So if I get in down here, at the end of every week, I set it to like the low or something. So I set it down here. This week, I'll set it down here. Next week, I set it, however low. But if it gets stopped out, it gets stopped out here. So there's multiple ways you could do it. It's just how comfortable you are with it. I'm okay with letting some profit go. But what matters to me is the length of time that I'm in a position. And if I can approach that 1 year mark in a position, that's the best thing that can happen for me because I'm saving on some taxes, and B, I don't have to move too much. I'm all for being lazy, doing the least amount of work for the most amount of gains. So it's all up to you. I found out that in my trading, it's sometimes doing nothing is better than trying to force something. So that's why I do it. Somebody asked if I'm in AMC or GME. AMC. I'm actually not in AMC or GME, but I think there could be a trade here. It's trending. It's trending up on the daily. So, but there's not much for me to go off of on the monthly or the weekly. Now, I'm a person that I like to see a stock that does really well, and then they have a dip. I don't really like stocks that been doing really badly for a long time, and then all of a sudden they just have a move up because I don't know if this is just like a fake out. But if you're just playing off the daily and playing like a really short term trade, I mean, it's be a good time to get in. It's not at the highs, 14 or 20. It's right now it's at 10. So maybe if you play from this 10, and it seems to be holding 10. So maybe play 10 to 14 or 15, then get out. So that's a good $5 gain for a few days. And then as far as GME go, I don't play it, but I follow it. I just to see what's going on. The hype is, I don't. Again, I don't like the stock, so I just like to follow it and see who's making money on it and what the pattern's doing. And it's doing the same thing AMC is doing. It's trending. It's making these higher lows on the daily. So higher low, high low. So if you think that this could be another higher low, it could go up and actually could break above this 295 mark, and then you could play that way. I mean, there's nothing wrong with playing these more risky stocks. Just don't risk more money than you can afford to lose. Um, so, do you think Sen also fake out? Thinking you're thinking about saying send the symbol, the ticker. Um, this one I don't know how. It's kind of. I don't know if this chart is true, but it's been around for a while. Looks like. Well, I wonder what they even do. Healthcare. This is a sector I don't really like, the healthcare, because they're really news driven. Um, but it seems a good thing about it is it seems to be holding this 250 level. I mean, you could take that as good news, or you could take it as bad news. If you play it and get in close to 250, set a stop for maybe 230 or 225, just go with it. For sure, the analysts, you can analyze it however you want, but you will never know. And the really really bad thing about healthcare stock is they're really news driven. So and a lot of that news will come pre market or after market. So you could get it if you get into a big position. I learned this the hard way. If you get into a big position and you don't know what's up in the timeline of that stock, like if they have a FDA news that's coming through, or if they're like pending FDA approval, or like a phase one, phase two testing, or some test results coming out, that could really hurt you. I've been hurt before where I got into a stock that I can share with you guys too. I got into CRA stock, and it was back in probably like 2015 or 2016. This drop right here, this monthly chart, and that was like pretty much overnight. From here, I bought it in highs too, 20, and then boom, it drops. And so I learned that, again, it's healthcare, that healthcare stock, they're really news driven. So I don't really want to play them much. And because I don't keep up with the news around it. So something like sends, you might want to be careful, because this might have already been the news, and then this is just people getting out, taking their profit, and then waiting for the next wave. Which if it's holding above 250, that could be the new bottom, and it goes up. Or if this falls through, it could go back to like 50 cents or a dollar. So be careful. Uh, so let's see. This week, everything. This is my gold's watch list. So my gold's watch list is things that I would consider buying. I know they're more expensive. They're more on the expensive side, but FSR is one of them, because just the EV news that's going around, and within like the next 5 years, it's supposed to be like more EV laws that are passing. So I like to get into uh, uh, the EV stocks, and especially when they're this low. If you notice the pattern of the weekly, every time it gets to here, like so. So I'm playing this pattern too. Um, but definitely do your due diligence. Now, another question: Do I have a good dividend stock? I do. Uh, AT&T. This is a dinosaur. This is what you call a dividend aristocrat. They've been paying out for like the last 25 years. For AT&T, it's even longer than that. And it's actually, I don't know if this is correct, but it was like 5%. But T, you can see T has been pretty stable for the last few years. Just get it low. Don't get it. I don't. This it's probably in the mid range. You see this chart. This is a monthly chart for the last like however long, like 20 years, and you can see it's been bouncing between 25 and 40. So what I've been doing is loading up when it gets close to 25. Under 30, I start a small position, and then as it gets closer to 40, I hold off. I say, I'm not going to get any more shares, or I just let the dividends reinvest itself. That's it. I don't buy in personally anymore. But as it approaches closer to 25 or 28, 25, that's when I get like to get in. And just because you don't want to ever get stuck up high here, because then it takes so long for it. I think it's only like a 5 or 6% dividend, so it takes like so long for you to get that money back. You see, you could be stuck in there for like a number of years, right? If you bought at that peak over here, 42, it didn't take until, and that was like in 2008. It didn't take until another 10 years before you even broke even on those shares that you bought. So that's why I buy them low. So T is a good one. Um, Verizon's another good one. But these are telecoms. Um, I don't know. Is there like a certain yield that you're looking for? Usually, I look for at least like 5%, and then something that's been paying dividends for a long time too. I don't know if you. I think even Union Pacific has a pretty good dividend. Union Pacific has almost a 5% dividend, and they've been paying consistently and increasing every single year for a long time, since 2006, 2016. I mean, if you're hedging, don't hedge stock with stock. You know, I mean, if you hedge stock with stock, you're just getting yourself into trouble. Like hedge, if you're gonna hedge it with like, because the stock market and the bonds market, they're inverse of one another. So hedge like your stock position with like a bonds position, or yeah, or better yet, just go into cash. Um, or if you do options, then hedge it that way. But don't hedge stock with stock. You go to a different sector. If a crash happens, you're in the stock market. The full thing is gonna crash. Right now we're not in a crash. We're just in like a rotation. So you know, it's probably just better to just go out into something else. But if you're hedging stock with stock, you're gonna end up hurt. Yeah, Union Pacific has a pretty good dividend too. These guys, they've been really stable for the last like 20, 30 years. There's charts. So this is a good stock to get into, especially if you want to just park your money. It's too high right now for me, but when it gets lower, for sure, get into it. Keep an eye on it because these stocks are really, 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 really good to park your money. Yeah, it's about Facebook. What's Facebook gonna look like? What is Facebook gonna look like? I don't know. You tell me. I think it's gonna look like Facebook. I don't know. So we looked at this on Sunday, and I drew this range out already. I still have it up, but I see that it's been playing with this range, and you see this weakness right here. Let me zoom in. Let me make this bigger. So you see this range. It's been playing with this range since like September of last year. Uh, yeah, since September of last year, and it's just been playing in this range. Now you see this weakness. This is what I will call weakness. It's not pushing through this resistance. And so, I mean, it could try, but today didn't prove it. It didn't prove that it was going to push through. So I'm going to expect it to fall. And when it does fall, I think it's going to go, check 280, 280, and then 275. It's still keeping this, but right now, none of this technical part will matter because it's range bound. So it could go between these two range. So then, just watch for the fall. I would even say I wouldn't even pick it up until it can get close to 260, 265, 260 range. That's what I would look for. I wouldn't look for anything that's too crazy. Do I believe in Cacti Woods its model, the ARC? Sorta. With that, the reason I don't follow them completely is because those guys, they have so much they have so much money. Whatever they invest in, I don't know. I don't understand fully why they're getting into something, but most of the time they're not getting into it for short term plays. Like they could be buying stuff, right? They could be buying stuff, and you will never have a clue why what they're seeing. And it could be a play that's like 5 years out. It's better to just like get their ETF if you believe in them, other than trying to copy their trades, because they're never going to tell you until after they got in that they got in. So, for it, I have their ETF up too. So if you have their ETF, I mean, this is a good time to pick it up at 200 average. And this 200 average is one that I look at all the time. Um, the reason is I think a lot of big players, they like to pick it up around there. You see, it never approaches 200 average before. So, you know, the last time was in, this is here. That was when like the crash of last year. That was So you can see it doesn't happen too often, but then when it does, this is a prime pickup area. You want to pick it low, don't want to pick up high. You want to pick it low. So definitely, I don't believe in them. I don't believe in Kathy Woods, but I also only play price movement and chart patterns. I don't do a lot of the research that for the fundamentals and everything, unless it's something that I'm planning to hold for a long time. I know it's going to be around. So, but an ETF, I think you have the safety of it. Well, what sucks about the ARC is it's so heavy in one sector. Like it's like technologies and whatnot. You can get hurt. Yeah. I think if I play anything tomorrow, it'll just be Spy again. Spy's been pretty good, been pretty stable. You can play it. See this range right here? It's between 393 and 396, the $3 range. Pick it up in the morning, get out at night, or when the day before the day closes. That's it. It's a quick play. Nothing too much. Or if you guys have the money for it, get some Tesla. You want some movement. Play this range. it's a it's a this right here is a $90 range. But you're gonna be beating yourself up. So it's gonna drive you crazy. So, today it moved up. Today it went from 600 to almost 640. So that was today's move. That's $40 range today. Tomorrow, I think it could get as high as 660. So yeah, but Tesla is one that I follow consistently, so that's why I know of it. And I would watch for it. I drew this out a few weeks ago, but I'll draw it again for AMD. I don't know if anybody will be interested in playing some AMD. AMD has been keeping this kind of range right here. This movement right here, it didn't really stay. So I don't even like. I would say this was an attempt to break this range, but it didn't happen. So you see this bounce from 75 to 90. Maybe it comes back. A few days trade. Probably 2 weeks at most. 2 weeks to come back up to here. Okay, more questions. X. Can I show you how to enter and exit my trade? I can, but I probably won't. That's the trade secret. Yeah, I can show you how I analyze it, but I mean, there's nothing to show. I've been showing you how I would enter it all the time. So this is X, right? X is American Steel materials, I believe. Material sector. So material sector. So this right here, it's not the greatest. It's been trending downward. This last movement, it's probably because of the rotation. But this right here, it's already broken around. It's already broken this resistance today. Oh, I drew it the wrong way. Come on. I drew it the wrong way. So I broke this resistance. Now, tomorrow what you want to see on X is that it breaks up above here and maybe keep above this right here, 25. Right? That 25 level, you want it to keep above 25. If not, it's going to fall back down. And when it falls back down, it could go as low as 21. Because this was the range from before. If you want to, so this 18 to 25 was the range from before. So you want to keep an eye on to see if this is a true breakout. True breakout tomorrow, it will continue to go up. Or it comes down and doesn't break below 25. So this range right here. You don't play that. If it's a breakout, it might. We don't know how high it is going to go again. So just play that. See it tomorrow to see if it breaks up above. So you see how this happened. So let's zoom in. The last time it made this peak, right? The very next day it fell through. Then it went to go test the support again. Stay in support for a while. Test and it fell, right? So this right here, this is maybe a breakout. But you have to see tomorrow. And how you can play this is if you think this is a true breakout and then it's gonna keep going, you can set an order for like 27. Set an order for 27 and put a stop at under 25. So like 24.50. Give it a little breathing room. And just if it keeps going, just keep it the trade. That's how you enter it. Right. So you set a and that's a momentum play. Momentum play means you're waiting for the trade to literally just like run into you, right? Run into you and just take off. So this kind of trade, you're hoping that this happens. And look at how long it's spent in here. It could very well happen like this. Just take off and then for this kind of trade, if it's a quick trade, just update your stock along the line. X is not a stock that I would hold for a long time. Hopefully that answers your question. I mean, I can't share everything that I do with you, but I can share you that trade. All right. Yeah, so that's X. X Materials has been doing good, so you have that. Cat is also in. No, Cat's industrial. Industrial is doing well too. So here's another trade for you guys. Easy trade. today didn't really break here, so I think tomorrow it's gonna fall. Right here. Sorry, this is the resistance. Right, tomorrow, I think it could go back to here. So around 220. 220 would be a good pickup. So I already have my puts in place since Monday. So one thing you can play on cat. They're not too expensive. I think the 200 the 200 puts are only going for like 200 piece too. So, you know, especially if you see it hitting a resistance like this, it could kind of pick it up. But you have to do your own research too. Don't take my word for it. Because if this goes up here, I'm getting out. if it breaks above this last high point, this all time high right here, 27, I'm getting out. And it's also $200 risk for me. So $200 risk for me is like very minimal. I think it's less than a tenth of a percent risk to me. So that's why I take it and I don't even sweat it. It's an all or nothing play for me. Uh, one that I was also interested in, Visa. Now I wish I would have got it closer to 200, but I didn't really pay too much attention to it. It's really slow. It's a really really slow stock. It's a park your money in here and then walk away. Give a dividend. So this bounce, this range. All right. How do I figure out how long to hold a position option? Well, a lot of it comes with time. For me, I judge it. I judge it based upon how quick I think it's gonna move. Like it's like for cat, right? Look at this and I say it took 1, 2, 3, 4 days to move up, and the last move down took 1, 2, 3, 4 days, right, to move down. So if I expect a downwards movement next, it could take a whole week for it to move down, right? For that whole move, it could take for a whole week. So I need a contract that it can't be just a week, because if it's just a week, data will kill you. Data will your contract up faster than you can even think. So then, if a trade, I think is gonna last, I think if it's gonna last a whole week to get to where I'm trying to get to, what I would do is I would go out and I would say I want to give it at least 30 days, right? 30 days to see how it plays out. And the lowest time frame that I would look at is maybe just 2 weeks. You know, but 2 weeks is really pushing it too. Um, so the more uh indecisive I am, the more time I give it. Like I believe for my cat position, I gave it all the way till May. So May 21st. May 21st, that's May 21st is 52 days. You know, it could take it in 4 days, but you know, what if it doesn't? I want to give it room for movement too, room for it not completely going down super fast. And so that's why I give it. And also, if you're in the trade and it's doing better than you initially thought, I also want to give it time so that it can fully play out. I don't want to get out too fast when the position is still good. Yeah. So it's a matter of looking at the price and what it has done before, and just uh, g- having an estimate. there's no magic answer to that. It's just how I do it is if I'm thinking it's gonna take a week, I give it more than a week's worth of time. 2 weeks, 30 days, uh, and the rare occasion I give it more than 60 days. But that's also down to how you're trading. Me, I'm a swing trader, position trader, however, trend trader, right? So I want to stay in a position for a long time. But if you're a day trader and your the time of you staying in a position is like 2 hours at most, don't go 2 weeks out. Go for that week's expiration date because you need that quick movement, to make it worth it for you. This is cat. I don't know what else are you guys looking at. I know the stocks that I look at are really slow, so I don't know if you guys have something that's faster that you want to look at. I know a lot of people play pennies, and pennies are really scary. To me, they're really scary. I can share a few of my stocks that I look at that are below below $10. This one that I'm looking at, POWW. I have a position in this, but this is the expected move for me, or even lower because I see it making these lower highs. But if it bounces off here, maybe around 640 is where it go. So even around here. News on WeStock. What kind of news are you referring to? Like they doing legalization, they passing a law. I think if you're talking about WeStock, it might be to do with Tilray, right? Tilray is the one that I've been hearing about. People mention Tilray. Yeah, if you're playing it off of the legalization news, it could be good to get in. But that's all like rumor. Usually it's you heard the term buy the rumor, sell the news. Okay, so if the rumor of legalization is coming out, then it'll cause things to pop up. But if it already came out, the news already came out, that move have already been done. So this stock is quiet right now. This has been such an extended move right now that it could take a long time for it to come back. It just like slowly die, slowly level out. Like see this right here on the weekly, it looks even better. So big rumor, and then it slowly dies out. Nothing, especially if it's like legalization news. If nothing comes up after that, then it just slowly dies. So I think this is what's happening. Rumor, and then it slowly dies again. It's a lower stock that you guys can play. You guys who are interested in those penny stocks. Zynga. See, Zynga has bounced below its 200-day. So 200-day, if you are playing it like this setup before, you give it time. So it went from 8 to 8 to 12. That's a play that was 4 months in the making. So you just play it based on your time frame. This is the daily, so you can see this on the daily. You're not doing much. If we go back even further, Just base off the 200, right? Just base off the 200. Easy play for you guys. Okay? Above the 200, you buy, and then you just get out whenever you're happy with the profit, or the next time we touch the 200. Okay? So getting about $2. Peak was $4. Here you get in about $3, 360. Out 450. That's a simple way to play. Simple way to play. I mean, you don't need anything super high tech. You need something simple. It'll work for you. You don't need all those all the technicals to make your charts look crazy. You can make it work. I don't know. I a meet and greet, it would be nice, but I think everybody's just in too different of a time zone, like or too different of an area where there's a lot of people in Minnesota, a lot of people in Wisconsin, even a lot more in California. But me, I'm like one of the few traders that it's from Michigan. So a meet and greet would be a lot of people traveling. I don't know, and we wouldn't know where we would host it. But definitely it'd be something that would be really cool. Somebody makes it big in the stock market, decides to host something. Open. I think this is open door. So an open door is something that I would be interested in getting into. It's holding at 20. And if it's holding at 20 and you think it's gonna go to let's go to 40. That'd be a good play. Open door. Low cost too. Layover in Michigan all the time. Yeah, Michigan is just like a passing state. In VIS, a low stock too that I have eyes on. I think this range might be valid. You see this range right here between 18 and 12. Gotta see this how this if it bounces back up. Today it looks like it's gonna bounce back up. Um speculative play though. Uh for me, I think this stock has potential. There was a lot of like rumors around it, around Microvision and Microsoft. So it could be something, but I also don't really like the pattern of it. The monthly at least. It's been beating up so much that I am in it, but I'm also very, very critical on it. I'm just watching it closely. Let's see. I don't know, PLTR. People have their eyes on PLTR. And it's like that approaches 200-day average. And these, and also you mentioned Kathy Woods earlier. Kathy Woods is actually really heavily invested in PLTR. I mean, she believes in it, but she also has like a 5-year outlook on it. The company has been around for a while, but it was just like this year that they went public and they're going to use like off the shelf software for their software as a service. So for you guys that follow Kathy Woods or know Kathy Woods, she is really into PLTR. She really likes it, and especially since it's like at its 200-day average, I would be loading up. Even if it goes a little lower, like below here, it's not too bad. Start loading up, especially since it looks like it's holding above 21, 2021. Great pickup. But these are not shorter term plays. You know, these are plays that you have to wait a few months for it to pan out. Right. But if you get in now when it's kind of quiet and when people are scared to get in, then you set yourself up for a great trade because if you, for example, if you were back here and you didn't get in until people start hyping it, people don't start hyping it until it starts running. So you might get in like up here, or they might be hyping it like for PLTR. They hyped it when it was like at 26. That's why we saw it like level out and then it boom here. So if you wait for the hype, you're getting in late. So you have to wait. You have to look for when people are very scared to get in, and then get in small, and then slowly add to it if it keeps holding, and eventually, if it takes off again, you'll be set for a good position. Yeah, the one thing about trading that you have to learn to do to be successful is to do the opposite of everybody. A lot of people, they're like, "Oh, I'm kind of scared the market's going down." Well, that's when it's the best time to buy. It's not the you start buying then, start loading up on it, and then when it does truly go up and go on a run, you got yourself into a good position. But if you're scared of these like lower stocks, definitely go with the higher end stock. Higher end, it's kind of like a brand of shoes, right? Would you buy Nike shoes or you buy Payless shoes? Right? If you're gonna run a marathon, you're probably gonna get Nikes or even some other running brand. So if you guys are new, stick to like the higher brand, the higher stocks, right? Higher stocks like Facebook, and every time they dip, just get into it. Am I into real estate? No, not yet. I've been focusing a lot of my time, literally the last like 8 years of my life, to stocks and learning how to do it. So I haven't really branched out from stocks yet, but I'm also still a pretty young guy. Yeah, I'm only like 29, almost turning 30 this year. So I'm maybe within the next 1 to 2 years, I might branch out into real estate, but that would be a whole new like venture for me. It'll be a lot of learning again, just to get good at it. So right now, I'm still focusing on stock. I'm getting to the point where I'm really comfortable with it. I don't need to spend too much time looking at stuff. So it's like, and it's working to me. So, um, for sure, within the next year or two, might branch out to real estate. But I also know that I'm a really lazy person, so I like to do a lot of hands off kind of work that just generates money for me. Yeah, I think Roku was another one that people should not sleep on. See, Roku, and a mistake I made a few years ago. Let me erase this drawing. Right, a few years ago, Roku did the same thing as doing now, and I got scared. I was like, oh no, Roku's never gonna come back up. It's not gonna come back up. Boy, was I wrong. I think it was down here because I saw it really low. I have my opportunity down here. Got this opportunity down here. I didn't even take it. So right here would be good. Is it always good to buy when the price hits the 200 in May? Um, for me, yes. It's very good for me. I like it, but I also follow it religiously, right? I don't, and sometimes it does bleed through. Like you have to really know the stock. Like for Roku's a pretty new stock. It's like 5 years. But if you look at uh for example, something like Microsoft, right? Microsoft rarely hits its 200. Right? We look at it rarely hits its 200. That's a long time ago. Let's see. So it rarely hits it. It hits it. That's a good pickup. That's another good pickup. You can see This was like the sloppy years from like however long ago. This is 2015. So that was a while ago. Yeah, but 200-day average is pretty good pickup, especially if it's a really good big cap stock, right? Large cap stock. 200 moving average is gold. It rarely happens, and when it does, you take full advantage of it. For me, for these bigger cap stock, sometimes if it just reaches his 50-day moving average, I'm happy with that. But if it can reach its 200-day average, it's golden. It's like Black Friday and Christmas all together in one. Then that's when you start looking to buy and open your position. I have a scanner. That's if that's what you're asking. I have a scanner. I scan for all these setups. So that's why a lot of my stocks that I actively look at. Well, some of the stocks I usually look at the 50, but some of the stock I have a 200 one also somewhere. Uh, I don't know if I still have it, but I have uh I have one or somewhere. I don't know for sure which one it is anymore, but I have too many scanners. But I have a scanner that looks for the 50 because sometimes the 200 is it happens maybe once a year, right? On some stocks, it happens once a year. So that's too long of a wait for me to get in. But if it can hit or get close to that 50, that's a good sign for me too. So my scanners are looking for stuff that's closer to 50 or above its 50. That's what I look at. Really easy trades. Nothing nothing fancy about my trading style. Yeah, so that 200-day is golden. This is Thermo Fisher, TMO. Thermo Fisher is high. It's a high cost stack, but look how stable it is. This is something that you can hold for a while. Yeah, especially if it's this low. If you're a little scared on it, just get a small position. It really happens that they come down, but if they do come back down and it gets to 400, so that's a $50 drop. That will be indicator for me to pick up even more, especially how the stock moves like this. This is but right now it's sitting right at 200, and it doesn't look like it's gonna break because it tries to break it for like uh 2 weeks already, and so I think it's gonna go back up. Thermo Fisher, but yeah, that's what I look at, the 250, and just play off of that. And the technical analysis to me, it's just a way to quickly look at the stock and just to know, just to know what's going on. You know, it's not anything fancy. Like you can just look at this and go, oh, I know it's trending up. Look at this one now. It's an uptrend, but it's down on its uptrend. So it's still an uptrend right here. Good pickup too. Paycheck, MasterCard. So I can quickly go through all of these at a quick glance like that and just know if I'm gonna pick it up or not. Yeah. All right, so that we're over the hour, but thanks everybody for joining me again. Hopefully you guys are learning and continue to come with questions. I'll help you out as much as I can. And I'll give out some plays every now and then, but you still got to do some DD and do some research. If you have some questions and how I trade, feel free to drop them in the comments and ask me, and I'll get to them. I don't know all the answers, but as much as I know, I'll share. But thank you everybody for joining me tonight, and you guys have a great night.